All right, have you ever wondered what the big players in crypto are really doing? Are they buying, selling? Well, with on-chain analysis, you don't have to guess anymore. Seriously, you can see their moves right there in real time. In this explainer, we're going to show you exactly how to read the market's hidden language straight from the blockchain itself.
I mean, we've all been there, right? Staring at a price chart, trying to figure out where it's going to go next. But what if I told you that chart is only showing you, like, half the picture? What if you could actually see the fear, the greed, the real conviction of every single investor in the market? Well, that's exactly the power of on-chain analysis.
So today, we are going to arm you with a whole new set of tools. First up, we'll cover the what and why of on-chain analysis. Then we're going to jump into how to read the market's pulse, get a feel for its psychology, and even figure out a crypto's true value. Stick with me, because by the end, you'll have a complete workflow and a trader's checklist to guide your decisions. Okay, let's dive in.
All right, first things first. What exactly is this on-chain analysis thing we keep talking about? And maybe more importantly, why should you even care?
Okay, so imagine this. A completely transparent, unhackable public diary that records every single transaction in a cryptocurrency's history. That's the blockchain. And on-chain analysis, well, that's simply the skill of reading that diary to understand what investors are actually doing, not just what they're saying they're doing. It's the action, not the talk.
Now, you've probably heard of technical analysis and fundamental analysis, right? Technical analysis tries to predict the future price, fundamental tries to find long-term value. But on-chain is different. It's not about the future, it's about the present. It asks, what are investors doing right now? It's almost like having a live feed of the market's collective brain. Pretty cool, huh?
Now that we've got the what and why down, let's get our hands dirty. How do we actually take the pulse of a crypto network? Think of it like a doctor checking a patient's vital signs.
So first, we look at the users. Are new people joining the network? Are folks actively using it? That's your active addresses and new addresses. Then, and this is a big one, we follow the money. We track the whales, the huge investors. Their actions can literally create waves in the market, so you want to know what they're up to.
Okay, here's a simple but super powerful rule of thumb. When a ton of crypto starts flowing into exchanges, it's usually a pretty big sign that people are getting ready to sell. And, when lots of people sell, prices tend to go down. That's potential selling pressure.
And on the flip side, when you see crypto flowing out of exchanges, that's a whole different story. It's like investors are taking their coins and locking them away in a digital vault. They're not planning to sell anytime soon. This shows confidence, a real intent to hold, and that's usually a pretty bullish sign for the price.
But on-chain analysis isn't just about counting coins and watching flows. It's about reading emotions. Are investors feeling greedy? Are they feeling fearful? Are they celebrating big profits? Or are they panicking and selling at a loss? The blockchain knows all.
So, let's talk about a metric with a kind of funny name, but a really powerful punch. SOPR. That's the spent output profit ratio. Just think of it as a profitometer for the whole market. It tells you, on average, if people selling their crypto today are making money or losing money.
Yeah, SOPR really just answers one simple but absolutely crucial question. Are sellers in profit or are they in pain? And the answer to that can tell you a lot about where the market might be headed next.
And the rule is super simple. If SOPR is above 1, it means sellers are, on average, taking profits. But if it's below 1, they're selling at a loss. And that's a classic sign of panic. In fact, if you look back at major market bottoms, a big dip in SOPR below 1 has pretty much always marked that point of maximum pain, which, funny enough, is often the best time to be buying.
Okay, so SOPR tells us about the people who are selling. But what about everyone else who's just holding? That's where NUPL comes in, net unrealized profit loss. It's like taking an X-ray of the entire market to see how much paper profit or paper loss is just sitting out there. It gives you a fantastic gauge of the overall mood.
All right, now for a question that has puzzled investors for, well, centuries. What is something actually worth? With on-chain analysis, we can get closer to a real answer than ever before.
You know how a car has that flashy sticker price in the showroom? That's kind of like market cap. But what really matters is the average price everyone actually paid for that model, right? Well, that's the realized cap for crypto. It's what everyone, on average, paid for their coins. It's a much more grounded, real measure of value.
So, what happens when you compare that flashy sticker price, the market cap,
to the grounded, what people actually paid price, the realized cap, boom, you get the MVRV ratio. This simple little calculation gives us an incredibly powerful gauge of whether the market is overvalued or undervalued.
This brings us to the ultimate question for any trader. Is the market totally overheated right now, or is there still some room to grow? MVRV can help you answer that. Historically, when the MVRV ratio gets really high, it's time to be cautious. And when it gets low, well, that might just be a major buying opportunity knocking at your door.
Okay, so we've learned about a lot of really cool, powerful tools, but how do we actually use them to make real-world trading decisions? Let's build a super simple workflow you can follow.
It's really just 4 simple steps. 1, pick your platform, your data source. There are great ones out there like Glassnode or CryptoQuant. 2, select your key metric, the tool that's going to answer your biggest question. Is it MVRV? Is it SOPR? 3, analyze the trend over time. This is key. Don't just look at a single data point. And finally, number 4, form a clear hypothesis you can test. Something like, okay, I think investor sentiment is shifting from fear to optimism based on this data.
Now, to pull this all together, let's create a final, simple checklist you can run through before every single trade. Think of it as a quick and easy way to make sure you're always looking at the big picture.
So before you hit buy or sell, just run through these questions. Is network activity picking up or slowing down? Is money flowing into or out of exchanges? Are investors selling in profit, or are they selling out of fear? And finally, is the market price way above or way below its fair value according to the blockchain? Answer those and you'll be in a much better position.
So, there you have it. You now have the keys to unlock a whole new dimension of market analysis. You can literally see what others can't. But listen, this is just the beginning. The world of on-chain data is huge, and it's always evolving. So my advice, keep exploring, keep learning, and most importantly, keep asking the right questions, because the answers, they're right there on the chain.